Okay, here we have the AMC Entertainment Holdings Incorporated 30-minute chart. This is stock ticker AMC. We had a fairly eventful week last week. There were some very significant price movements here that were found, and these did occur during holiday-thinned trading conditions that I think that are important for a few different reasons. During holiday trading periods, the money markets are completely closed on Thursday. And then when you see these types of scenarios, especially during the summer, you'll see a lot of people really just pull their orders out of the market and not bring them back into the market until the following Monday. It's a very common, phenomenon in stock markets. Many people say, sell in May and go away. It just sort of means like don't even trade during some of these periods during the summer. And then when you add to that the fact that there was a true market closure on the 4th of July holiday, you can see that there was a holiday thinned trading condition that can often lead to volatility or just make it much easier to sort of push around price action. Ultimately, what I'm getting at here is that, during these types of conditions, it would be much easier for short sellers to start entering in large bearish orders, large selling orders into the market, and to push prices significantly lower. The conditions are favorable for that type of strategy, just because it's much easier. There are just fewer people in the market, so it's much easier to push around share prices. But as we can see here, any downside activity that would have occurred in a scenario like that has been extremely limited. We really have not seen much movement to the downside here, and the overall price trend is clearly focused in the upward direction. We were calling this right from the beginning. We saw this series of higher lows here during the June 26th trading session, and there were a few other factors there that went into that, which suggested that prices really were going to start rallying. And this rally did unfold. I mean, we are looking at higher prices here. So overall, what I'm saying, ultimately, what I'm getting at with this holiday condition is that short sellers really did have an opportunity here to push prices significantly lower. Much below the far below the $5 mark. And as we can see, those efforts really were not successful. Which we closed the trading week at 504. They weren't even able to convincingly break the $5 mark. And in my opinion, that really wouldn't be the line in the sand anyway. I do view that as kind of a random number. I don't really see any particular significance to the $5 mark. My real line in the sand here to the downside would come in a bit lower. To the downside, in order for me to really change my bias here, I would really need to see a break below 470. If we saw that, then I would maybe start to expect a full retracement of this bull move. In other words, like I would expect to maybe see a retest of the prior lows type of thing. But we're nowhere near there, and we do have other levels of support that would come first in the event that we did start to see short sellers take over, and really take control of this market. Overall, I'm just not seeing it here. I'm just not seeing much of a reason to believe that the bearish momentum is in control. So, I mean, if we look at the 30-minute chart here, we can see in the relative strength index reading that the momentum indicator is strongly positive. It's been positive for quite some time here. Can maybe readjust this line a little bit here. But overall, the bullish momentum has been in place really since June 24th. Prices themselves were still showing a bit of a decline at that point. I mean, you have to remember back here, we were seeing some fairly substantial declines, but we were actually starting to see a bullish divergence here, a bullish divergence condition. And this is one of the reasons that we expected to see prices move higher. This is one of the reasons that we were making this initial trade call, on June 25th, June 26th. The momentum conditions were already starting to change, even as these prices were declining. And this is one of the reasons why chart analysis does, allow you to identify, good trading signals before they occur, before they're even visible in share price action. A lot of people think that means, you're looking at a crystal ball or something like that, but that's not the case. You're just looking at a confluence of indicators, a combination of different pieces of evidence, and if they all point in the same direction, then that direction is the most likely outcome. doesn't mean that you're 100% sure something is going to happen. It means that, you're trading in the direction of the most likely outcome. So, if you've got the percentages on your side, then you'll win the majority of the time. And that's all you need to do to be a successful trader in the market. You only need to win 51% of the time. We try to, we try to do better than 51%, but, technically that's all you really need. So, overall, the momentum condition here is favorable, and it's strongly favorable. It has been favorable for quite some time. And the current indicator reading is still, believe it or not, I mean, it's still below the midpoint of the histogram. So what does that mean? It means you've got the relative strength index here. It's a scale of 0 to 100. And we're currently trading at roughly 46.80. So we're not even at the midpoint here. So what this really means is that you have much more room here to extend to the top side before this asset becomes overbought. So, there's really not much, resistance here overhead. If we are looking at literal, price levels here, the next level to the top side does come in at this would be the July 2nd high, which posted at 536. And we're currently trading at 504. So just over 30 cents away from here, we should encounter a little bit of share price resistance. But if we're looking at the indicator reading, which is characterized by bullish momentum, overall, the indicator reading has a great deal of space here to extend before becoming overbought. I mean, you could see a fairly substantial price move with this amount of space. You have to remember, because it's the indicator reading, it's not the share price. So, these are sort of average prices and things like that. So, it could take quite a bit of time here for this indicator reading itself to change. I mean, it's sort of like a battleship turning around type of thing. Like, it can take some time, to develop in a certain direction. And you've got a lot of space here before this starts to become overbought and overextended. So, even though we've got this pretty strong rally here, I mean, this is a very nice looking trend structure. It's like you're building a house or something. You're adding on the levels. This is a stable, strong price structure. So, when you combine that with the positive reading in the relative strength index and the momentum indicator, you do have a recipe here for higher prices. And the upside here could extend substantially, because we're not even at the midpoint of the histogram. So, there's plenty of room here to extend to the top side, even though we're trading at somewhat elevated levels on the shorter term time frames. So overall, there is a lot here to be positive about, and much less to be negative about. There really aren't very many negative signals here in this chart. So this is the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.